Hey everyone, welcome back to Corporate Decoder, the place where we dive headfirst into the wild world of corporate finance and pull out the juicy bits. Today we're looking at Wheeler Real Estate Investment Trust, Inc. And let me tell you, it is a bit of a juggling act with their stock and preferred shares. Alright, let's get straight into it. Wheeler Real Estate Investment Trust, Inc. is filing an 8K, which is a current report for significant events. The earliest event they're reporting on is the 5th of December 2025. This report is all about some rather interesting exchanges of shares. Basically, the company is swapping one type of stock for another without taking any cash. Think of it like trading in old video game discs for new ones, but of course with a lot more money involved. It is a way to help manage their different kinds of shares, especially the preferred stock and common stock. So on the 5th of December 2025, Wheeler Real Estate Investment Trust, which we'll just call the company from now on, made a deal. They agreed to give out 429,000 shares of their common stock. This is their regular stock that most people can buy and sell. In return, they received 33,000 shares of their Series D preferred stock and 66,000 shares of their Series B preferred stock. Imagine you have two different types of membership cards at a club and you trade them in for more of the main membership cards. The exchange rate here was pretty specific for every 2 shares of Series B preferred stock and 1 share of Series D preferred stock. They issued 13 shares of common stock. The actual exchange happened on the 5th of December, and then again on the 8th of December, 2025. Then, just a few days later, on the 8th of December 2025, they did something similar again. This time, they agreed to issue 451,200 shares of common stock. They got this in exchange for 37,600 shares of Series D preferred stock and 75,200 shares of Series B preferred stock. The deal here was a bit different. 12 shares of common stock for every 2 shares of Series B preferred stock, and 1 share of Series D preferred stock. Again, these shares were settled on the 8th of December. The key thing to understand here is that the company did not get any money in these trades. They were basically restructuring their own stock by converting preferred stock, which has special rights and often pays dividends, into common stock. The preferred shares that were traded in were then cancelled. They did this using an exemption from the usual rules for selling new stocks. This exemption, called Section 3 and 9 of the Securities Act, applies when a company exchanges its own securities with existing security holders and doesn't pay anyone to make the deal happen. It makes sense because they were just trading their own debt for equity with people who already own their debt or other preferred stock. Now, even though that was a big part of the filing, there is more. They also have to talk about the conversion price of their 7.00% subordinated convertible notes due in 2031. These are basically loans that can be turned into stock. Before the 5th of December 2025, if you held these notes and wanted to convert them into common stock, the price was about $3.48 per S-share. This meant for every $25 of the note you had, you'd get around 7.17 shares of common stock. However, something changed because of how the Series D preferred stock was handled. For the redemptions happening in December, the lowest price at which anyone converted their Series D preferred stock into common stock was about $3.45 per S-share. Now, because of a special clause in the agreement for those convertible notes, this lower conversion price for the preferred stock actually forced a change in the conversion price for the notes themselves. This means the conversion price for those notes got a big haircut, dropping all the way down to about $1.9 per S-share of common stock. This is a pretty significant adjustment, meaning holders of those notes can now get about 13.19 shares for every $25 of principal. That is a 45% discount compared to where it was before. Or in simpler terms, they get a lot more stock for the same amount of debt. Speaking of those Series D preferred stock redemptions, the report details what happened in December. On the 5th of December 2025, which was a monthly holder redemption date, the company processed 3 requests to redeem Series D preferred stock. They bought back a total of 12,700 shares. The price they paid was about $42.62 per S-share. This included the original $25 per S-share plus all the dividends that had piled up by the 5th of December. And how did they pay for this? Not with cash, but by issuing more common stock. They handed over 157,093 shares of their common stock to settle these redemptions. This again shows how they are managing their capital structure by using stock rather than cash when possible. The average price of their common stock over the 10 trading days before that the 5th of December redemption date was about $3.45. This number is important because it ties into how they determine the value of shares for these kinds of transactions. Looking at the bigger picture of these Series D redemptions, the company has handled a lot of them. Up to this point, they've processed 397 redemption requests, buying back a total of 175,981 shares of Series D preferred stock. All of this has been settled by issuing about 445,000 shares of common stock in total. As of the 8th of December 2025, they had 1,783,599 shares of common stock and 1,519,144 shares of Series D preferred stock still out there. And they're already looking ahead to January 2026 redemptions. The deadline for people to request redemptions for January is the 25th of December 2025, with the actual redemption date set for the 5th of January 2026. Now, like most of these reports, there is a section on forward-looking statements. This is basically a disclaimer saying that any predictions or expectations about the future might not actually happen. They're saying that things could change, and they are not promising that what they envision will actually occur. It is standard legal stuff to protect the company. So, what does all this mean? Wheeler Real Estate Investment Trust seems to be actively managing its capital structure by converting preferred stock and convertible debt into common stock. This can be a sign of flexibility, but also potentially a sign that they are trying to reduce their fixed obligations like preferred dividends or interest payments on debt. The fact that the conversion price for their notes was adjusted so drastically all the way down to $1.9 per share is a big deal. It means that the market, or at least the holders of these convertible notes, might have seen a significant drop in the perceived value of the common stock, or there was a trigger event that forced this adjustment. This move significantly dilutes existing common stockholders if they convert their notes. On the other hand, the Series D preferred stock redemptions are another way they're cleaning up their balance sheet. By issuing common stock to redeem preferred stock, they're reducing their preferred dividend obligations. This could free up cash flow in the long run, but it does increase the number of common shares outstanding, which can dilute earnings per S-share for existing common shareholders. Looking at the numbers, the company is actively trying to simplify its capital structure. The shift from preferred stock and convertible notes to common stock suggests a strategy to move towards a more straightforward equity base. However, the significant adjustment in the convertible note conversion price signals potential underlying issues, or at least a significant change in valuation expectations. It is a move that could benefit longer term debt holders by giving them more equity, but it puts pressure on current common shareholders. Overall, Wheeler Real Estate Investment Trust is in a period of active financial restructuring. The strategy seems to be deleveraging and simplifying their share classes. But the sharp adjustment in the convertible note conversion price is a notable risk. It can indicate market concerns or that the company's valuation has indeed fallen significantly, making debt conversion more attractive. Alright, that is our breakdown of Wheeler Real Estate Investment Trust's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching, see you next time.